If you've ever looked at the financial markets and just felt, well, overwhelmed by the chaos or really wished you had a more reliable edge, then this deep dive should be really interesting for you. Today, we're digging into how some legendary traders, specifically Stan Weinstein and Mark Minervini, figured out how to align their trades with the big market forces. Our goal here is really to give you a kind of shortcut to understanding their combined approach, how they found those super performance stocks and those really precise low risk entry points. Okay, so let's start with Stan Weinstein. He really changed how we look at market cycles, didn't he? Mapping them into those stages: accumulation, markup, distribution, markdown. For someone just trying to make sense of all the daily noise, what was the big takeaway from his stage analysis?
Well, what's really key, I think, is stage two. That's the markup phase, the advancing phase. That's where the serious gains typically happen. And it's defined pretty clearly. The stock's price needs to be consistently above a rising 30-week simple moving average. That moving average, it's not just some random line on a chart. It acts like dynamic support. It basically shows you the underlying institutional consensus,
Yeah.
where the big money is flowing.
Right, so that rising 30-week MA is like the definition of that healthy markup phase. So what's the signal then, the immediate warning that tells a trader, nope, don't touch this if it breaks below that line?
Oh, it's a huge warning sign.
Yeah.
If a stock that was in a solid stage two suddenly dips below that rising 30-week MA, especially if it happens on like heavy volume, that's a major red flag. It suggests that institutional support might be drying up. It tells you the main trend could be weakening, time to reassess, or maybe just get out. And, connecting this to the bigger picture,
Yeah.
just knowing the stage isn't quite the whole story. It's not enough. The pros, they use multiple time frames. It helps avoid traps. So the weekly chart tells you what to do strategically. Is this stock really in a healthy stage two? That's the big context. And then the daily chart tells you when to act. That's for the tactical, the precise entry.
Okay, so that weekly chart context, it sounds like it filters out a ton of that day-to-day choppiness. How does blending that big picture view with the granular daily chart actually stop traders from getting faked out by short-term moves? How does it give them real conviction?
Well, it gives you conviction because you stop reacting to every little daily wiggle, right?
Yeah.
The weekly chart confirms the underlying strength is there. That's your foundation. Then you use the daily chart to pinpoint those better entry spots within that established uptrend. It lets you filter out the noise, basically, and you have the confidence to, hold through minor dips because you trust the bigger trend is still pointing up.
Okay, so Weinstein gives us the framework for finding generally healthy trends. But how do we really zero in on the absolute best stocks within that stage two? That sounds like where Mark Minervini comes in with his really rigorous trend template.
Exactly.
It's like a strict checklist, isn't it, for finding the elite stocks? Things like the price has to be above its rising 150-day and 200-day moving averages. And it needs a high relative strength rating, too, meaning it's already beating most other stocks.
Precisely. It's a tough filter. And once you find a stock that passes that template, a really superb stage two candidate, the next big question is, okay, how do I get in with minimal risk? And that's where Minervini's signature pattern comes in the volatility contraction pattern, or VCP. What you see is price swings getting progressively tighter and tighter. And crucially, you see volume just dry up. It signals that sellers are basically gone, supply has vanished, the ideal entry. It's that decisive breakout above this tight pattern, and you absolutely need to see it confirmed by a big surge in volume.
Right, so it sounds like a real waiting game then. You find the stock, then you have to patiently wait for that PCP to form properly. For traders who are, maybe a bit eager to jump in, what's the biggest mistake they make when trying to spot and trade these VCPs?
Impatience,
Yeah.
usually, or jumping the gun. Yeah. They might see a little bit of tightening or maybe a slight dip in volume, and they get in before the pattern is, fully cooked, before that clear contraction is finished, or they enter before the decisive breakout on volume.
Yeah.
That confirmation is key. The VCP really demands patience. You need that obvious contraction, and then that powerful confirmed launch. Rushing it just leads to getting stopped out. Frustration.
Okay, so the real power here is the synergy. You use Minervini's template to screen for the absolute best stage two stocks, and then you patiently wait for that precise low-risk VCP entry to show up on the daily chart. It's not about chasing random moves. It's all about preparation and execution on confirmed setups.
Exactly right. And, there's huge psychological edge to this kind of systematic approach. Having rules like this, helps you overcome those emotional traps like FOMO, that fear of missing out, chasing stocks way too high, or the opposite, holding on to losers, hoping they'll come back. It forces discipline. It makes you cut your losses short, typically, like 5% to 8% from your entry point is a common rule, while importantly, letting your winners actually run. It's all about systematically trying to stack the odds in your favor again and again.
So when you boil it all down, this deep dive really highlights that consistent high-performance trading. It isn't about gut feelings or luck. It's about systematically aligning yourself with the market's dominant trend. From the big picture weekly context right down to the precise daily entry. And it really demands patience and strict discipline.
Absolutely. And maybe here's a final thought for you, the listener, to take away. Think about how applying this kind of systematic, patient approach, waiting for the clear signals, managing risk proactively, how might that transform your own decision-making, not just in markets, but maybe when you're navigating any complex situation, a business challenge, a personal project, or even just trying to make sense of all the information overload we face every day, something to think about.